Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing AbCellera stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. AbCellera is a biotechnology company that uses its proprietary database to research and develop human antibodies to address pandemics and common diseases. The company says drug development fails too often, takes too long, and costs too much money. That is due to limited technology and access to information. This company plans to solve those problems since they are more focused on the technology side as opposed to its competitors, which mainly focus on the medical side and lack the necessary technology skills to make the drug discovery process more efficient and streamlined. It costs $3 billion and takes 10 years to develop the average antibody drug. Even with all that work, the failure rate is 90%. AbCellera develops partnerships with small, medium, and large drug companies. Those companies tell AbCellera the idea for the therapeutic agent. Then AbCellera performs the entire discovery process and validates the work. It then turns everything over to the drug company for clinical trials. They lock in royalty agreements with other companies, which creates a long and healthy revenue stream. Most of the company's revenue comes from royalties. They collaborate with some really big companies: GlaxoSmithKline, Novartis, Pfizer, Sanofi, Teva Pharmaceutical, Moderna, etc. The company is headquartered in Vancouver, British Columbia, Canada, and was founded in 2012. The ticker trades on the Nasdaq and Deutsche Börse. Let's get started with the model. This is a mid-cap company, 2.3 billion market cap. They're trading at $8 a share, and they have 283 million shares outstanding. Let's look at the financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. The company had negative free cash flow in 18 and 19, a small positive in 2020, then a big positive in 2021. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that also looks really good in 2021 at 153 million. Revenue is a sales for the company, and that grows more than 40 times from 9 million to 375 million. This is the company's income statement. The top line is the revenue, the sales. Below that is the cost of revenue. These are all the expenses directly related to generating the revenue. Revenue minus cost of revenue gives you your gross profit, and that grew from 9 million to 330 million. Below that is their operating expenses. Research and development and marketing are big operating expenses for this company. Gross profit minus operating expenses gives you your operating income, and that grew from under 1 million to 222 million. They spent 5.2 million of interest on their debt, which is a little lower than 2020 of 6.5 million, but a lot higher than 2019 and 2018. Then below that is other income and expenses. These are all the gains or losses not part of the company's core operations. They do receive grants from different organizations. That would fall into other income and expenses. Then below that is their pre-tax income, then their taxes, and the bottom line of the income statement is their net income. This is the company's income statement directly from their 10K. In 2021, a breakdown of their revenue is 19 million from research fees, 21 million from licensing fees, 8 million from milestone payments. When they hit a milestone in the drug discovery process, the company they're working with will pay them a milestone payment. And most of their revenue is from royalties, 327 million. They develop antibodies that assist a company like Pfizer to develop drugs and vaccines. If they assisted Pfizer to develop a drug and that drug got FDA approval, then this company would receive royalty payments every time someone gets prescribed that drug. 46 million of royalty expenses. Sometimes they get help from other companies during the drug discovery process, so they have to pay them part of the royalty. 62 million of R&D, 7 million of marketing, 42 million of G&A, and 14 million of depreciation. So their operating income went from negative 4 million to 204 million. Last year they received 8 million of grants. This year was 17 million. So their net income was 153 million. Even though their net income was a lot higher in 2021 compared to 2020. Their earnings per share only went up 3 cents from 53 cents to 56 cents. Their diluted EPS is 48 cents. This means if all the convertible debt was diluted into equity, all the outstanding warrants were converted to equity, and any other security that can be converted to equity was done so, then your earnings per share would have went down 8 cents. You can see they added a lot of stock in 2021. It went from 159 million shares to 276 million. And the diluted shares outstanding is 318 million. If the stock price starts rising, then more dilution occurs. When the stock price goes down, you won't see as much dilution. This is the company's statement of cash flows. The top line is operating cash flow. That's how much cash the company generates from its operational business. So they generated a lot of cash flow in 2021, 245 million. And they spent a decent amount on CapEx, $58 million. Operating cash flow minus CapEx gives you your free cash flow. So the company's not paying a dividend or buying back stock because they just started generating cash flow. So they're investing back into the business to grow it. In 2020, they added 600 million of stock and 100 million of debt. You can see they did not add much debt prior to 2020 because a company should not be adding debt when they don't have much positive operating cash flow. Because when you issue debt, you have to pay the interest on your debt. And if you have no cash flow coming in, that means you have to take on more debt to pay that interest. But if you issue common stock, you don't have to pay a dividend. This is the company's operating cash flows from their 10K. And the way you calculate operating cash flow, you start with your net income. That was 153 million. Then you have to add or subtract the non-cash items on the income statement. We have to add back depreciation of 4.4 million, amortization of 10 million, more amortization of 3 million, stock-based compensation of 31 million. Then we have to adjust for changes in working capital. This year they received 60 million of royalty payments. Last year they were owed 197 million of royalty payments, so it's a cash outflow. Even though they reported a net profit of 150 million, they actually generated 240 million of cash flow. Last year they generated a lot less cash flow than net profit because of the royalty receivable. This blue line is their revenue since 2018. The orange is their operating cash flow since 2018. So you can see they had hardly any revenue until mid-2020. Then it took off when they helped develop the COVID vaccine. And it's been fairly steady since then. It's come down a little bit at the end of 2021. And this is a high margin business. Once a drug gets FDA approval, then the cash just flows in. So either you make no money or you make a lot of money. There's not too much in between with pharmaceutical companies. The forecast is for their revenue to drop really low by 2024. If they do not develop any antibodies that result in a drug or vaccine getting FDA approval, then their revenue will probably go down like this. But if they're able to get one drug approved, then you'll see their revenue go up a lot. This is their investing and financing section from the statement of cash flows. And in 2021, they spent 58 million of property and equipment. They bought 274 million of short-term marketable securities. They received a grant of 32 million. They spent 11.5 million in acquisitions. Last year was 87 million. And they spent 48 million in investments in long-term assets. This could be the investment in another biotech company. They didn't have much going on in their financing section in 2021. Last year they had a lot going on. They generated over 500 million from issuing common stock. They generated 75 million from issuing preferred stock. And they generated 90 million from convertible debentures. So last year they had a cash inflow of 680 million. This year they have a cash outflow of 4 million. This is the equity section on their 12/31 balance sheet. They have 830 million of equity. They raised 710 million from selling their business, and they profited 114 million from running their business. Let's look at the capital structure. 1 billion of equity, 36 million of debt. They're 97% equity, 3% debt. And they could pay off all the debt with the cash on their balance sheet and still have 687 million of cash left over. Their equity balance has grown a lot since 2018. That's the dark blue line. The green line is their cash balance, and the red line is their debt balance. But the reason their cash and equity have gone up is because they've been issuing a lot of stock and debt. I gave them the lowest whack on Finbox, 6.8%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 2.5 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $2.3 billion. We divide that by 283 million shares, and we get a calculated stock price of $8.18. I didn't have that much information to project their future revenue and future free cash flows. I just showed you a scenario what would need to happen to justify a stock price of $8.18. The way I got this $8.18 is if their revenue decreases 1.8% for the next 4 years. On average, they convert 30% of their revenue into free cash flow. So I multiplied their future revenue estimates by 30%. That's how I got their future free cash flows. So it could really go any way. The company can 10x and they could have tons of sales, or the company can struggle for a long time trying to generate more revenue. 8 analysts priced this stock and the average price target is $35. The low is $20, the high is $44. You can see they have a lot going on. They have 35 partners. They started 69 programs with those partners. If even one program works, that's a ton of revenue. They have 5 molecules in the clinic. They currently have 155 programs under contract. They have lots of cash on their balance sheet, and they're owed $44 million in royalties. These are some of their partners: Pfizer, Moderna, the Bill and Melinda Gates Foundation, Merck, lots of big and well-established companies. The stock has pretty much only gone downhill since it IPO'd. It was close to $60 a share at one point, and now it's below $10. If you invested in this stock when it IPO'd, you'd be down 86%, while the S&P is up 14%. The stock is down 73% in the past 52 weeks, while the S&P is up 8%. The 52-week low is 742, the high is 39, and the stock is on a decline, trading below its 50-day and 200-day moving average. Over 2 million shares are traded each day on this stock. Of the 283 million shares outstanding, 208 million are on float, 40% are held by institutions, and it has a high short percentage. Over 11% of the shares on float are shorted. It is good to see they're adding employees every year. They're close to 400. When a company adds employees, that indicates they have stuff going on in the company. If you invested $10,000 into this company when they started trading, you'd be at $1,700 today. That's an 83% loss. In the past 12 months, there's been insider buying and selling, but lots of shares have been sold, over 16 million. Only about 300,000 shares have been purchased. Here's a list of all the insider buying and selling in the past 12 months. Lots of executives at the company have been selling. The CEO, Carl Hansen, sold 6 million shares at $24. The general public, people like me and you, own 42% of the company, institutions 31%, and individual insiders 27%. The CEO of the company owns 19% of the stock, 54 million shares valued at $448 million. Then Alliance Asset Management, Baker Brothers. The famous investor Peter Thiel owns 3.5% of the company, and then SoftBank, the Japanese fund. Let's look at their financial ratios. They have a good PE of 15, that's stock price over earnings per share. Price of sales is decent at 6.2, that's stock price over sales per share. And a really good price to book of 2.3, that's stock price over book value per share. Let's look at their non-current assets. 18 million of property and equipment, 115 million of intangible assets. When they acquire other companies, they sometimes receive intangible assets with the acquisition. 34 million of their intangibles are licenses, 41 million is technology, and 40 million is in process research and development. They have 32 million of goodwill. Goodwill is the premium you pay when you acquire another company. 19 million of investments or loans to another company, and 8.3 million of other. Let's look at their non-current liabilities. 3.7 million of operating leases, 26 million of deferred revenue and grant funding. This is cash the company has received, but it has not booked it onto their income statement as revenue. When they complete the project, then they'll book it on the income statement. 9.1 million of contingent considerations. This means if a certain event occurs, then AbCellera has to send cash or stock to another company. An example of something that may lead to a contingent consideration is if the drug passes another phase of the clinical trials. 26 million of deferred tax liability. This will increase the company's taxes in the future, and 7 million of other. They have a really high return on invested capital of 52%. They can cover their interest payments with their operating income 43 times. They have a good ROE of 15%. The market median is 7%. The average is 2%. And they have a really high current ratio of 7.7. That's current assets over current liabilities. Let's look at their current assets. 600 million of cash, $213 million of accounts receivables. This is how much money other companies owe this company, and $6 million of other. Let's look at their current liabilities. $20 million of accounts payable. This is how much money AbCellera owes other companies. $13 million on the current portion of contingent considerations. $36 million of income taxes payable. This is how much money they owe the government in taxes. $27 million of accrued royalties. This is how much money they owe some of their partners in royalties. And $6.6 million of deferred revenue. Deferred revenue is when a customer prepays for a product or service they're going to receive in the future. When AbCellera delivers the product, then they'll take this off their balance sheet and book it onto the income statement as revenue. They generated $186 million of free cash flow in 2021, and they have over $800 million of working capital. So it seems like the company has enough funding to get through the next 12 months without needing to add any debt or equity. The best way to look at ratios to compare them to companies in the same industry. There are 757 companies in the same industry as AbCellera. AbCellera ranks 57th in market cap at $2.3 billion. The average is $1.4 billion. All their numbers are better than average because they did so well in 2021. But it seems like most of the revenue from the COVID vaccine has dried up. So unless they lock in more royalty agreements, they may not be bringing in much more revenue, and their ratios will get worse. So to summarize, this stock has really gotten beaten down since they IPO'd. And I really hope they can start helping other companies develop drugs and vaccines so they can start generating more revenue. Because I am invested in the company, so it looks like we just have to wait and see. I ranked their free cash flows, revenue, and ratios 8 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.